Hey fellow dividend value investors, welcome back to another video. To be honest, I was really looking forward to making this video because many of you have been asking me over the last few months to share my opinion on L'Oréal, one of the most beautiful stocks in Europe. That's why today I'll do a bit of a deep dive on the company. I'll share with you some background about the company, how they performed over the last few years, and ultimately I will share with you my thoughts about the valuation using both the dividend discount model and the discounted cash flow model. I'm excited, I hope you are too, so let's get straight into it. So L'Oréal is one of those companies with probably one of the longest dividend history track records in Europe. It's a company at the moment with, I think, about 58 years of dividend history. It's currently on number 8 of the Noble 30 Dividend Aristocrat Index. You can find it on my blog. I will put the link in the description. I'm calculating there the number of years of 32 years because that's only the number that I've been able to trace back. But if I go to the investor relations website, I found a picture the other day where it traces back to 58 years of dividend growth. And if that is the case, it will be the number 2 after Nestle. And hold that thought because there's a special relationship also between Nestle and L'Oréal, which I think is very interesting. If you don't know L'Oréal yet, I honestly believe it doesn't need an introduction from that point of view. But probably what's good to highlight is that the company has been founded by Eugene Schuller in 1909. And what I really like about this company and its foundational days, and specifically when you also see when the company really got established in 1957, is really the focus on science. So they really use a scientific approach to increasing, let's say, or to producing products that makes people feeling more beautiful. In the past, their mission statement was more around like, we want to make every woman feel beautiful in the world. I think that's very, very powerful, but over the years it has been evolved. There's the impact on the planet nowadays that they are quite aware of. So they want to do good for society and the people around them. But their latest update, and it's an update from not too long ago, from this year, I believe, is create the beauty that moves the world. I find it really powerful, this company. It has so much brand recognition all around the world. It's probably, if we would go to one of those lists, probably somewhere in the top 10. And I think their mission is so strong and appeals so many people around the world that that's one of the reasons why it is such a successful company effectively over the last 100 years. The mission has been really driving them. So I just mentioned about the relationship between Nestle and L'Oréal, and that's what I want to dive a little bit deeper into now. So what you need to know is that probably since the 70s, I believe 74 or something like that, Nestle has an ownership in L'Oréal. I think they did some partnerships also in the US, which gave Nestle the opportunity to take a position in L'Oréal. Not 100% sure about this, but also the family of Liliane Bettencourt has also a strong ownership position in this. Now, what's good to know that in 2014, the L'Oréal and Nestle, they came to agreement to reduce the shareholdings of Nestle in L'Oréal from 29.4% to 23.3%. And with that, they also reduced the board of director position or seats from 3 to 2. Up till today, they have still 2 board of directors in the board of L'Oréal. What is then really interesting here, if you look at it, they currently own 23.2% of L'Oréal. The family of Bettencourt currently owns 33% of L'Oréal. So together, they have around 55% shareholdership. I also know that around 23% on top of that is owned by institutional investors. Think about pension funds. Around 7.5% is owned by French shareholders, and only around 4% is owned by international investors. I think it's good to know about this because it means like even the pension funds, they really have nothing to say about L'Oréal because it's mainly owned by 2 parties. Another interesting fact I found is that the company has only, over the whole history, has only been owned or led by 5 CEOs. And Jean-Paul Agon is the current CEO already since 2006. So he's sitting already in power for 15 years. This shows a lot about the stability of the company over the decades. And I think it's exemplary if you think about long-term investing and long-term buy and hold. I don't think it gives so many companies like L'Oréal that have such a track record from an ownership point of view and also from a CEO duration point of view. So this was about other companies owning L'Oréal. But what makes it really interesting is that also actually L'Oréal has a strong ownership, and in this case in Sanofi, the pharmaceutical, because it owns currently around 10% of Sanofi, and it's actually a large contributor also to their dividends, because I believe they receive around 378 million in dividends on an annual basis. This is a lot. So if you then look at the non-current financial assets on the balance sheet of L'Oréal, we will later go to the balance sheet also a little bit, 9.3 billion out of the almost 10 billion is from the investment in Sanofi, which they purchased at the time for around 4 billion. So I find this very interesting because while it's providing a lot of their dividends to Nestle and the Bettencourt family, it's also receiving dividends from Sanofi. And we haven't even spoken about any products yet that L'Oréal is selling to the market. I find this ownership structure and from a portfolio management point of view already quite interesting. But that's from an ownership point of view. What I think is also really important to know for you as maybe a potential investor in the future is that it is a company with a long acquisition history. It has been acquiring companies and doing licensing deals actually already since as long as we can trace back. And I would say that this is one of these things that you need to know as an investor in L'Oréal, that is growing a lot by acquisition as well and licensing deals, not only by product innovation. What this all has in common, that is most of these acquisitions are really a nice play on their strategy when it comes, for instance, lately to more ecological, let's say, developments and mission statements that we just referred to, but also they all have a strong brand power, like really luxury brand power even. And they often have a science-based, background in those companies. So these are really good fits when it comes to fitting into the brand of L'Oréal. Speaking of which, let's have a look at the brands. I think this one page here that I took from the investor relations website just says it all. Who doesn't know Maybelline New York, L'Oréal itself, Garnier, Kiehl's, Lancôme, Yves Saint Laurent, Armani, Biotherm, the salves, Prada, it's all over the place. These are really, really, really big brands. And to talk about big brands, look at that. They have $8 billion brands. And those are almost all that I just mentioned. So if you think about this, L'Oréal, in my opinion, and if you also would go into the market reports, is just dominating the beauty industry. It's an iconic brand with iconic brands. And from that point of view, I think this is really an excellent and great business from a business model point of view. So let's have a look a little bit then in how the company is structured. Because last year, in 2020, the company earned in sales around 28 billion. I know with their latest half-year report, I think the trailing 12 months are slightly above 30 billion. So there's been quite some growth in the first half of the year as well. What you need to know is that the company is split in 4 divisions: professional products, L'Oréal Luxe, consumer products, and active cosmetics. By geographic zones, it's selling their products all over the planet effectively, but I think it's nicely distributed between Asia, Europe, and America. It's almost a third to all of these. But Asia is growing really quickly, and it's already their biggest geographic zone by sales. And if we then look at the business segments, you see skincare here. And this was a surprise to me because I as a child, I grew up with L'Oréal being the one for the lipsticks, but I wasn't aware that skincare is the biggest segment of the company when it comes to sales. I found it really interesting, and it makes sense. I believe these are all kind of really high margin businesses, specifically with large brand power behind it. So if we then look at professional products, we're really talking about stuff here that you find at your hairdresser, that they are using to make yourself more beautiful effectively and feel beautiful when you come back from a hairdresser. And of course, it's not just a hairdresser, it's much more around it. Consumer products are the ones that you find in the shops, in the big luxury malls, warehouses. Ralph Lauren as well. You come across all of these everywhere. Then we have also L'Oréal Luxe. It's a focus on the really luxury brands. And I just mentioned Ralph Lauren. It's actually probably in this business unit here, but you also see Diesel. So clothes are also a big part of this. And last but not least, we've got the active cosmetics, which in my opinion are more focused on the pharma point of view. So really that they are also really good for your health and maybe help you fix some skin issues and such. But so far, this has been a look into the past. Let's also look a little bit into the future. I believe that there are 3 secular growth trends benefiting L'Oréal. The first one is e-commerce, and we have seen that during the pandemic last year, they made a really quick shift to e-commerce. They are selling a lot via their own shops right now or via the retailers that are doing digital business, and they had an increase of 62%. I believe in the latest half-year results, the year-over-year increase was 25% or something like that. This is huge. This is really huge. And on top of that, I think the middle class growth in Asia is also one of the secular growth trends. This middle class will continue to grow. They will become more wealthy. They will have more money to spend on luxury brands. And I believe that also in Asia, with the right targeting, also there the people want to feel beautiful. And I think this will continue to be a major growth trend in the upcoming 10 years effectively. And then the third, but not the last growth trend that I see is changing preferences by millennials. And I believe that we have seen this already in their revisited mission statement, where you see already 3 items that I highlighted here. So drive social innovation, inclusivity, and protect the planet. I think this is really playing on the upcoming generation. And I think it's just really smart. And I also believe from what I've read that the company really is serious about this. So it's not just painting the grass green. So all in all, I believe that this is a really strong business with really strong secular growth trends. So for me, this is already a Class A company if I look at the business. But, you know, sometimes a good business could be a bad stock. So let's have a look into their financial performance. So let's have a look at the sales by the division and geographic zones. As you can see here, the sales has been most quickly growing or rapidly growing in the active cosmetics business segment. But the main cash cow here are the consumer products and L'Oréal Deluxe. They did get impacted by the pandemic. Reason for that is that the malls were closed and everything, but also here the shift to digital has really mitigated the impact. When I looked into the market reports, I can tell you that L'Oréal was one of those companies that still outperformed the rest of the market because they're one of the lowest declines during the pandemic, and this tells a lot about their brand power. It effectively also means that consumers had less to spend. You need to make wiser choices, and seemingly a share of wallet, or the most share of wallet, continue to go to L'Oréal from that point of view. Here you also see the stunning growth of Asia Pacific. In 2018, they were still only earning around or making sales of 7.5 billion, which is now already more than 10 billion with the latest figures. This is just great growth, and I think it will continue to be a strong growth driver. So if we look then generally at the earnings, it was still earning around €4 in 2011. It's now around 7.30, and I think their forward earnings are slightly more than 8, so it doubled their earnings over the last 10 years. I would have expected more. If you think about such a company growing, or with such a brand and such a performance, I would expect it to double. If it grows with 10% every year, for instance, in earnings, I would expect to double the earnings every 7 years. It has not been doing that. From a free cash flow point of view, in the last 5 years, we see that it almost doubled the free cash flow, but I would like to exclude the trailing 12 months of 6.3 billion. I believe that their forward, free cash flow is rather around the 5 to 5.5 billion to take out the one-off free cash flow boost in 2020. The reason for that was during the pandemic, they played a lot with the working capital, left a lot more money in the pocket, and those one-offs paint the grass a little bit greener than it actually is. So I believe the free cash flow has to be between 5 and 5.5 billion. And from a balance sheet point of view, this company is just rock solid. It has almost no debt, 1.3 billion in capital leases. It has also been going down since last year, and a stockholder equity of almost 30 billion. I mean, this gives you probably like a debt to equity of around 4 to 5%. Really strong balance sheet. I mean, this is a balance sheet like Microsoft and such kind of companies with hardly any debt. But hey, these numbers are more based on 2020 numbers and before. Also, let's have a look at the last half year results then really quickly. As you can see here, the headline was already a 21% like-for-like growth. I mean, it was really a rock solid first half year. And I really liked that North America came back to growth again, and also that the e-commerce that I referred earlier to grew with around 29.2%. This is just amazing, and their ability to shift to digital so quickly just shows about the management execution quality that a company as L'Oréal has. And this is an old CEO, so he's still on top of his game. I really like it a lot. Their EPS for the first half year is around 4.6 euro. I mentioned I believe that the full year EPS will be probably above 8. I'm not sure it will be 9 euro, but let's see, it should be somewhere between 8 and 9 euro. So from a financial performance point of view, this company has been doing well, and even in the last year doing exceptionally well. So let's also look then a little bit how it pays attention to the shareholders and if we actually get enough money out of it. So what is really interesting here, and I just mentioned to you in the beginning of this video, it has a track record of 32 years that I was able to trace back all the way to 1988 using my own data analysis, going into every annual report that I could find. But according to their website, it's around 58 years of dividend growth. I just haven't been able to validate it. Based on the forward free cash flow, I believe that the payout ratio will be around 40%. Their dividend growth has been around 5.35% over the last years, and one of the reasons for that is also the flat dividend during the pandemic, because they at that moment in time they had wanted to give a dividend hike of 10%. They haven't done it. They have done their dividend hike this year to restore what they intended to do last year. This has muted down the dividend growth, but I think it will be a little bit more, probably around 6 to 8% going forward. From share buyback point of view, this company is also actively buying back shares. It has been granted a 1.2 billion share buyback plan again for a maximum of 3 million shares. Just to be clear, this is about 0.5%. I don't really find it impactful, such a low share buyback, and also half of that is offset by issuing new shares to pay bonuses and such. And we can see that here there was a big decrease in 2014 to 2015, but since then there has been gradually decrease of shares. If we go into the latest figures, you will even see that it dropped below the 560 because of the share buyback already being finished for this year. But I believe that later this year you will get all the share issuance again. So that's why it will be probably at the end of 2021 around 560 going forward. So from that point of view, I think the dividend growth history has been really great. From a buyback, it could do more, I think, with such a balance sheet. It's just really conservative. It keeps them having the flexibility. From that point of view, I'm also very happy with it. And maybe they are also not buying back shares so aggressively based on their multiples. Let's have a look at that later. It might actually be a very wise decision. But as with any company, there are also risks associated to it. I also want to give you a little bit the alternative view to the company. So I believe that these are the main risks that the company might face. Supply chain risk. I mean, if something happens like a global pandemic and they are not able to effectively manufacture products that L'Oréal needs, it's a severe risk here for the for the delivery of their products. And on top of that, I also think we live now in an inflationary environment. So any input inflation that L'Oréal might not be able to pass on to their consumers might be a risk that we as shareholders need to take into account. Personally, I think with such a brand power, they should be able to do it. But let's see how what the future will bring us here. Second one, I think a global economic slowdown. I think if really shit hits the fan, I think we might see an impact in sales here. Last year during the pandemic, there was a lot of money printing behind it. As an example, in America, they got $600 a month, I believe. So in that case, you need to worry less about your costs. But if this is not happening during a market crash or a financial crash going forward, which hits the economy, we might see issues here, and the same at that moment in time with currencies. We don't know how the currencies will behave between euro and dollar, or euro and the Chinese yuan. Let's see, but I think this is a risk that we need to take into account. Last but not least, also issues at Sanofi. If something happens to Sanofi, it will impact L'Oréal because they might need to do impairments on the share price, which will be reflected in their earnings. Luckily, not so much in their cash flow. Although if they would have a dividend cut on top of that, it would make it a bit more pressure on their dividends. But we have seen their balance sheet is rock solid. So again, I believe that this risk is still, let's say, low to medium from an impact point of view. I think it's good to know about these risks, but I think now that we know all of this, it's time to start valuing the company. So let's have a look at the valuation. I will show you some metrics. I will show you the dividend discount model, and I will show you the valuation from a discounted cash flow model point of view. So if we look at the share price at the moment, it's almost touching 400 euro. It's also the first time that I want to talk about the share price now, because until now I haven't really looked at it. 400 euro, it has been growing quite nicely. It was 187 euro in May 27. So within 4 years, it was able to more than double their share price, which is really, really great. But we have seen it has not been doing this in earnings. And this is something we really need to take into account. So it seems to that the share price and the multiple has been growing faster than the earnings growth. And we see that here as well, where over the since 2016, let's say, till early 2020, the multiple of the earnings was around 30 to 35. It's now between 50 and 60. So most of the growth we have seen since last year was due to multiple expansion. Please keep that into consideration, because multiples tend to gravitate back to the mean. So if we look at this then, the dividend yield is currently at 1%. It's not a lot in my opinion. Dividend growth of 5.2% over the last 5 years. It doesn't hit my Chowder rule numbers. EPS and free cash flow payout ratios look really good. The multiples, like we thought already, also on a forward PE is 45, is really high. Price of free cash flow is 35. Usually these kinds of multiples already shy me away from L'Oréal. We'll do soon the discounted cash flow model as well to see if there's such strong growth behind it for the future. But usually this is already a pass for me to invest in a company like L'Oréal. Other than that, looks good. Credit rating, I believe, could even be better for L'Oréal, but maybe the credit ratings agencies have a bias towards US companies. From a value share point of view, return on invested capital is 4% more than their weighted average cost of capital. So with every euro invested, they are generating much more than the cost of capital, and this is what we want to see, because this is really shareholder creation in my shareholder value creation in my opinion. So let's then look at it from a dividend discount model. I believe that dividends are the main way you can reward investors, and investors invest to get money out of the business. So if we take that approach, the dividend discount model is always a nice one to do a quick back on the napkin calculation here. If we take the current share dividend per share of €4 with a discount rate of 8%, so I want to get 8% growth out of this company and a dividend growth rate of 6.5%, I believe that the share value should be around 260 euros. We just saw that the company is touching 400 euros at the moment. So in my opinion, this company then, based on the DDM, is heavily overvalued. Let's also look at it from a discounted cash flow point of view. Here's the same. I believe that the fair value per share is around 250 euro. It's more or less in line with what the dividend discount model showed us. If we look at the cases that I used here, so if I used the assumption of an 8% growth over the next 4 or 5 years in cash flow, plus 4% growth in cash flow afterwards at a discount rate of 8%, what I just mentioned, it's not the weighted average cost of capital here, but what I want to get out of the business. Why 8% and not 10%? This is such a rock solid company that I calculate less risk in the returns that I need. Using a terminal multiple of 20 gives me a baseline share price of 242 euros. You see also the other cases that I've been modeling, a more optimistic and a bearish case. So that gives me a fair value of 245 euro, which tells me that this company at the moment is heavily overvalued. I would be interested to buying this company around 250 euro. It's currently trading at 400 euro. So probably I will not see it anytime soon around this. But I have learned to really look at the valuation. The market is very expensive. And I would say this has been reflected in L'Oréal. Many people I know are still buying or nibbling into L'Oréal because they are afraid of missing out, because they say, well, the company has been expensive for many years. It's true, but I want to get the most bang out of my buck. It's not even having a proper yield that I find interesting here, 1% yield. So this really makes me think about this company. It's a really, really great business, but way overvalued at the moment. It should come approximately 40% down before I will get interested. Hey, that's it about investing. We cannot buy every company at any moment in time in history. We have to be patient. I hope to earn and get L'Oréal into my portfolio one time. If it really comes towards 250, you can imagine that I might initiate quite a large position there. But for now, I'm staying away. I hope you enjoyed this deep dive. It was a bit of a longer video for a single stock. I hope very insightful for you. If you like this kind of content and don't mind to hang on a little bit while I'm explaining all of this, then hit the subscribe button, give me a like. It might help the algorithm. I don't know. I'm still testing all of this. But for now, thank you so much for staying here. I really love the engagement that you guys are giving, and have a great week ahead.